The secret word is stagflation. Although I guess it's not so secret. If there is stagflation, you don't have a better economic environment because you have inflation that the Fed can't fight because you have a weak economy. So the Fed is reluctant to raise rates because it'll weaken the economy further. So the Fed is kind of, has his hands tied behind its back. Plus, the weak economy widens the budget deficits, and that means a weaker dollar, more money printing, more inflation.
In this video, Peter Schiff, renowned economist and author Peter Schiff discusses the potential return of stagflation, economic condition characterized by inflation and slow economic growth. According to Schiff, the Federal Reserve's ability to fight inflation is hindered by a weak economy, leading to widening budget deficits, a weaker dollar, and more money printing. The latest GDP and inflation figures, which showed a slower growth rate and a larger increase in inflation than anticipated, have raised concerns among economists about the potential economic deterioration ahead. Schiff highlights that these figures may not fully capture the true extent of inflation and warns of further downside risk, particularly if stagflation continues to loom. The markets reacted negatively to this news, with the Dow experiencing a significant drop, but later recovering some losses. Schiff believes that the economic scenario points to a challenging environment for the Federal Reserve and the economy as a whole, and the best possible outcome for gold stocks is stagflation. Let's get back to the video.
So that's a slowdown in spending and GDP, but the core PCE in particular came in a bit hotter, quite a bit, and there were some revisions to January. But what's important is that the core PCE, which supposedly is the Fed's, favorite measure, this is the one that's supposed to be going down towards 2, and instead it's going up in the other direction, and it's been moving up all year. And so that sent a scare through the markets. I think the Dow at one point was down maybe 600 points, although it paired most of those gains, not by the close, and then made them up today. I mean, it was still an up week for the stock market, particularly the Nasdaq, which didn't get back all of last week's loss. Last week it got killed. I talked about that. Nasdaq was down about 5.5. It was up about 4% today. Finished with a strong gain. Google had good earnings, or it was up by $10 or 10%, rather, something like that. A new all-time record high. Nvidia up 6%. Of course, it wasn't all good news. Intel was down 9.5%, but overall, you had a lot of buying in tech stocks, but I don't think they're out of the woods. I mean, I think the chart looks like there's more to this correction. So I would expect some more downside, especially as the stagflation scenario continues to play out or produce more evidence. If there is stagflation, you don't have a better economic environment because you have inflation that the Fed can't fight because you have a weak economy. So the Fed is reluctant to raise rates because it'll weaken the economy further. So the Fed is kind of, has his hands tied behind its back. Plus, the weak economy widens the budget deficits, and that means a weaker dollar, more money printing, more inflation. So the best possible economic scenario for gold stocks is stagflation, which of course is the worst economic scenario for the economy, for the Fed. But unfortunately, that's what we're headed for. So the interesting thing was, even though this bad news came out on stagflation, which of course immediately meant that the markets dialed back their expectations for rate cuts, the dollar sold off yesterday, pretty much across the board. The other numbers that came out today that were also problematic for the stagflation were the personal income and spending numbers for March. So personal income came out up 0.5, which was expected, but spending was up 0.8, which was hotter than expected. I mean, that matched the spending from the prior month, but it was supposed to drop to 0.6. Now, again, why are people spending more? Well, because things cost more. That's why they're spending more. They're not buying, right? And even though these numbers were supposed to be adjusted for inflation, they're not, because the government numbers don't accurately capture how much inflation there actually is.
In this section, the discussion revolves around the recent consumer spending and personal income report. The spending was up more than income, leading to a decrease in the savings rate, which is a concerning sign. The core inflation rate, as measured by the Personal Consumption Expenditures Price Index, rose by 0.3% month over month and 2.8% year over year, moving further away from the Federal Reserve's 2% inflation target. Schiff argues that the target was only introduced when inflation was below 2%, providing a convenient rationale for implementing quantitative easing and maintaining low interest rates. He also questions the authenticity of the 2% inflation target, suggesting it was an excuse to create inflation and stimulate the economy. The economy now faces the challenge of stagflation, a combination of slow economic growth and inflation, as indicated by a recent report from the Commerce Department. Let's get back to the video.
Spending was up more than income. The difference was made up for by a collapse in the savings rate, which went from 3.6% in the prior month down to 3.2%. This is the lowest savings rate, I think, in a couple of years. So this is not good news, right? That Americans are having to deplete their saving. This is bad news, right? When the economy is good, you save more. That's when you add to your rainy day fund. You have to tap into it when times are tough and you're struggling. And that's exactly what Americans are doing, is they're struggling and they're tapping into their savings in order to do it. Now, also on the stagflation, we got the PCE, which was supposed to be up 2.6 on the year over year, was up 2.7%. So again, headed further away from the Fed's 2% goal. The prior month, it was at 2.5. So if you're going from 2.5 to 2.7, how can the Fed have any confidence that we're drifting down to 2% when we're actually rising in the opposite direction? And the core year over year was up 2.8, which was better than the 2.7 or higher than what they expected, but it matched the 2.8 from the prior month. But 2.8 is a hell of a lot closer to 3 than it is to 2. Now, the month-over-month numbers were in line, up 0.3 on both the headline and the core. The reason the numbers were hotter was because of the revisions to the earlier months, but still going in the wrong direction. But, one thing that's interesting, and I actually posed this question on X earlier today, but the 2% inflation target wasn't invented by the Fed until inflation was below 2%. So for years, during the 1960s and 1970s and 1980s and 1990s and even the 2000s up until 08, right? The Fed never announced that it had a 2% inflation target. Why? Well, because inflation was above 2%. So they didn't want to have a 2% target when inflation was 3 or 4 because they didn't want to do anything to actually lower the rate. All of a sudden, inflation is like 1.5, 1.1, and out of nowhere, all of a sudden the Fed says our target is 2%. Why? Nobody asks, right? How did this happen? Congress never called the Fed and said, hey, we want you to target 2%. All of a sudden, the Fed just invented this 2% target. The only reason they did that was because inflation was lower than 2%. When it was above 2%, they never wanted that target. It was only when they were below. Now, why? It was a convenient excuse to create inflation because they wanted to print money. They wanted to stimulate the economy with QE and artificially low interest rates. So they made up this pretense that, well, we need 2% inflation. That's our target. And God damn it, we're only at 1%. That's really terrible. This is really dangerous territory here. We're skating close to the edge. So now we're back above 2% inflation, and now they're kind of stuck with that target. They're never going to get it back down there because they never were able to get it back down there. They never even had the guts to try. And so now they've just kind of painted themselves in a box. Now, maybe at some point, they're hoping people will forget about this 2% inflation target because they're not going to hit it, right? It was only the target when they were below it, and it wasn't really a target. It was an excuse. They wanted to create more inflation, and so they used this phony 2% target as a rationale for doing it.
Peter Schiff, the unexpected shift from recession readiness to the threat of stagflation in the U.S. economy has been discussed. This development has left investors uncertain and concerned about the economy's trajectory. The implications of the emergence of stagflation for the U.S. economy and financial markets are significant, and the speaker invites viewers to share their thoughts in the comments section. The video concludes by encouraging viewers to give a thumbs up if they found the content helpful and to subscribe for updates.